Welcome to Let's Talk Investing, a co-production of the Globe and Mail and the Investor Education Fund. I'm Rob Carrick, personal finance columnist at the Globe and Mail, and with me is Dr. David Stanley. David is an ex-psychology professor who has become an expert in dividend investing, and he's a frequent contributor to the Canadian Money Saver magazine on the topic of dividend investing. David, let's talk about finding the best dividend stocks. Some people think that a high yield is a great thing, but what is a high yield telling us on a dividend stock?
I guess, Rob, it depends on what you mean by high. Certainly can be too high. I like to think of myself
What's a threshold that makes it too high to you?
If it gets up, and we're talking about dividend stocks now, we're not talking about income trusts.
Right.
If it gets up 6, 7, 8, 9%, I start to worry.
Okay, so 4 or 5% is high, but still inviting.
You bet. You have to take a look at the whole package.
Okay. Now, what sectors do you look at when you're looking for dividend stocks, and what sectors do you think aren't really that rewarding for dividend investors?
The first thing that comes to my mind, of course, is financial stocks, and I'm talking about things like banks and insurance companies. You have utilities, you have telecoms, pipelines. Those are the ones we normally look at.
All right. Now, I know there are some dividend payers in the materials, the mining sector, and the energy sector, but the yields are small, and you don't really hear much about those companies in terms of their dividend. Do you invest in energy and, I guess, resource stocks for dividends?
I do a little bit, but not for dividends particularly. And we're looking for capital gains there. The point is that these companies are growing, and they need to throw that money back into the company. They can't afford to give it to me.
Okay, so the dividend there is almost like an extra reward. It's not the point of holding those.
Just a little icing on the cake.
Okay. Now, bank shares, they scared a lot of people back in 2000, 2009. They were wondering, can they hold the dividend? Turns out they did.
Sure.
They haven't raised the dividends in quite a while, but they did hold the dividend. Can we hold bank stocks with confidence, knowing that we're going to get the dividends indefinitely?
I really think so, Rob. They've been the stalwart over the years for dividend investors in Canada, and I think they will continue. And I think you're going to get some dividend increases maybe sooner rather than later.
David, I have to ask you about Manulife. It's not a bank stock, but it's in the financial services area. They cut their dividend. It was kind of a rude shock to investors. To me, it sort of showed that you always have to have in the back of your mind, understand the risk that a dividend can be cut. How much of a scare did that put into you as a dividend investor when Manulife cut its dividend?
The interesting thing, of course, is everybody talks about Manulife cutting their dividends. They don't talk about the ones that are increasing their dividends recently. Just in the last couple of days, we've had two.
You know what? Give me a list of some companies that have increased their dividend recently.
Well, TransCanada Pipe was up yesterday, and today Thomson Reuters is up.
CNR and Fortis are two that have raised recently. Can you think of any others?
Sure, BCE. Quite a few Canadian stocks have.
All right, so look for dividend growth as well as just a plain dividend.
You bet.
All right, thanks, David.